100,000, right?
100,000, yeah.
Okay, and then scroll down in this slide. Yeah, and now here you say your house is currently worth of 100,000. You can adjust this number. Each year your house appreciate 5% each year. What that means? It's not 1 year. It's 1 year, 2 years,
So
3 years.
it's like a compound interest, right?
No. Each year. So first year 5%, then again 5%, again 5%. So you have to consider all 5 years, not just one time.
Yeah, that's what I'm saying. So the first 5 year would be 5% of the 100,000, and the other would be the 100,000 plus 5%, and then that would be the current value, right?
Keep going there till to 5th year.
Yeah. Okay.
Understood. Your risk factor is 10%.
Mhm.
What is 10%? Is your R. Right? R. So in your formula, you need to use R. Your house monthly maintenance cost is 2%. Means these are your expense. Right? So I'm going to do that in front of you. But if you read this problem, and again, this is humble request, don't take me wrong. As a business analyst, you only have 1 or 2 opportunities to do right or wrong. Right? So first thing what I would do is, whenever somebody gives you a problem, try to read the problem 5, 6, 7, 8, 10 times. Right? That will give you much more clarity than Google or any other software. Because this is a hint. So now I understand clearly, if I see this thing, that I have given 5 years problem. So in 5 years, currently my house is 100,000 worth. It means I might have, let's say, started with 100,000, but what will be the 5 years value, right? So which we are calculating. Now each year your house appreciate 5%, so I need to consider that. The risk factor is 10%, the monthly expense is 2%, and additional assumptions to find future value. Now additional assumption is pretty vague. The reason it is designed vague because it's percent to percent it varies. But right, because assumption means each year you have maintenance, right? I put it in Google Class, WhatsApp when Mr. Gurpreet was asking, but then I didn't see any update. So I'm not sure about that. You guys understood because you have a house. Many of you own house, right? You know how it works. Utility bill comes, right? Appreciation comes, depreciation comes, property tax comes. You need to consider that, right? If you are considering those, then it will help you to calculate correctly. So which I'm going to show you now. Make sense? Google Class, but I'll also upload this new one also, so that way you will have a reference. Make sense? The year is, whenever you think about product valuation, you have to consider year from current to all the way. Can I do 5 years? Can I do 6 years? But in our example, we asked to do only 5. So that's why we are using 5. Clear? Now, well, now they have given some hint. Again, we cannot put all the details as we go, but they say currently your house is worth of 100,000. So if I sell today, then that house will be worth of 100,000. The question is how much the house will be worth of in 5 years, right? So they give appreciation. So what is the appreciation they give you? 5%, right? So let's say if I say here current house cost. So current house cost is 100,000. So I'm going to put it here, 100,000. Just like that. Right? Anytime you use number, it's a good idea to do dollars. Yeah, proper one. Formatting the reader, we high level people. Example, number mistake. Then they give appreciation percentage. Now, please understand, I'm using some example here, 5%. If my numbers are different than yours, then just make it adjustment accordingly. Right? So this appreciation rate. I believe they give us a 5%. Right? So we'll say 5%.
Yeah.
So far, you guys with me? Give me thumbs up. It's okay to give me thumbs up, okay? Yeah, just to give idea in case if you do not know, it's a 5 a.m. in Ahmedabad, Gujarat, India. So I woke up at 3 a.m. just to make sure I'm teaching this class. So I need some engagement here. If you're just doing multitasking, then you're losing a lot of value, because these are not simple things. 100,000 worth of value you are learning. Okay, so make sure you're active. Give some thumbs up. I have 6-7 different interesting formula to do. But if you're very what you call inactive, you will not learn. Just like Diva said, right? I was confused. I tried my Google source, not very clear. That is where I want you all to understand the experience, but make sure you gain the benefit, right? Confusion is good, but remain confused is not good. Okay. Now, appreciation is 5%. So what we need to do, we have to use this one and calculate each year what will be the house value if I sell it. Yes or no? So current house value I'm selling. Okay. So now what I'm going to do, please pay attention. I did plus sign, I click on it. This is going to be fixed, right? This is going to be fixed. So I'll say, I'm going to keep it like that for now, no problem. And then I'm going to multiply that. But when I multiply, it's a 5%. So what will happen? It will create a problem because it's a 5%. So I should multiply by 1 plus this percent. Now, why we are doing that? Because 1 means original value and 5% means increment. Are we clear? Why are we multiplying by 1 plus, right? Because if somebody say I'm giving you 10% increment, means 1 means your original and 10 means your increment. So 1.1 you multiply. So here I'm multiplying 1.05. Okay? Enter. So this will be the value for next year. Now, if I drag this thing, what happens? If I drag this thing, what happens? It is bringing the same value. So that's not right. So what we can do here, we have to use this value and same formula. This value and same formula. So now if I double click, let me repeat again. Let me just delete and show you. Up to this, you may not have problem. When I double click, I see formula. This one times 105, right? Now, if I drag this guy here, see here, it gets me the same value. So double click here. And then instead of using D, I have to take D3. But then this is 1.04. So if I log this guy, then it will work properly. So how do I log it? Very simple. I delete this thing. But when I did this formula, I just need to click on the B4 and press function F4, function F4, function F4. So if I do function F4, my speaker was off. If I do function F4, it will lock it. Everyone understand why am I locking?
Yes, I did the same.
Sorry?
So yes, I
Sorry,
did the same thing.
Perfect.
I did the
Wonderful.
same thing.
Perfect.
To keep
Perfect.
the increment going.
Yes. Perfect. You guys are great. So now, if I drag this thing, it will be perfect. And each year you can see the price value change. Make sense? So one more time, this is the original value. This is the appreciation value. I use this two formula, and this is the original value times 1 plus 5%. Once I did that, I just make sure I lock the 5% because 5% is not changing. This value is changing. So I did not lock that. And once I have that, I drag it. So what I'm saying here, if I sell this house in 5th year, I will get 127,000 because it's appreciating 5%. Now the question is the house value, right? So if house I bought it, is that if I sell 127, is that the house value I should ask or anything else I should ask? What would be my future value for that house? Give me some hint. What else should I do? Because there's an adjustment.
Would you have to consider like maintenance and things like that done on it?
Wonderful. So before we go to maintenance, you are absolutely right. Before you go to maintenance, I want to think about income sources. Is this house going to generate any income?
Oh, like if you rent out a room,
Yes. So I'm going to rent. Yes or no, Alexei? Very good. What else?
would tax breaks from using a space as an office?
Excellent. Now you're talking. See, this is what called adjustment. See, I always tell people, and I will tell you a small story. If I want to sell land, there will be maybe many people will come, but let's say there are three buyers come. I have land, like maybe acre, and the one buyer say I'm going to give you $10,000. Another buyer say I'll give you 50,000, and another buyer say I'll give you 5 million. Land is still same. There are three buyers, but each buyers are offering me different price range. Do you know why? Why they're offering different price range?
Is that based on their valuation, based on what they're going to use the land for?
So you understood this concept very well. If you don't understand the same land, there are three buyers. One is giving 10,000, one is giving 5 million. Then you are not really getting the power of this exercise. This exercise has a power to truly value a product, project, company, house, assets. And this requires a little bit deep thinking. I will be honest with you. You are a business analyst. And those who do not do analysis, they are not business analysts. An analysis requires thinking, researching, talking, grouping, like that. Why that guy said this is 10,000? Why the other guys think 50,000? Why the other guys think 5 million? Because they have done adequate analysis. The people who does analysis think it's worth of 10,000, they're going to offer 10,000. The people who are doing analysis, they think it's 5 million. So the 5 million, we ask question, why 5 million? The guy say, guys, you don't know. There's a lot more crude oil underneath your land. So if I dig that, I will be billionaire. So I'm giving you 5 million. The second guy, why you're offering 50,000? He say, I'm going to create an apartment complex. So if I create an apartment complex, I'm going to sell it out. I'm going to make a lot of money. So I'm giving 50,000. The first guy, why you are going to give you 10,000? So I don't know anything. I'm going to, do farming about potatoes, and potato is not expensive. So I'm going to give you 5 or 10,000. So see what kind of analysis they did, and based on that, they evaluate the product. So you need to think about, is this house can be demolished and create a building out of it? If this house is close to any freeway where it requires certain type of, builder, certain type of thing. So what kind of leverage you have with this house? Is this house in a normal community, or this house is in a special, close to maybe, commercial area? Sometimes you might have seen movie, one house in the middle of certain thing, and builder cannot build buildings or in a complex because of this house. So builder is now going to give you millions of dollars, even the house is not worth. So those type of analysis we need to do. Make sense or not? And those are adjustment. And person to person it will vary. Again, in this case, we don't have that much. So I'm going to put it here, very simple thing. So what I'm going to do here, let's say this house, which I'm renting right now. So I'll say renting, rent income. Now let's say just for time being, we make like rent income, let's say 3,000 per month we do. So if it is 3,000 per month, right? And we will increase rent by 3%, right? We'll increase rent by 3%. So if my renting income is 3,000 a month, so per year, how much I will have? If 3,000 a month, yearly, what would be the value?
36.
36. So I'm multiplying by 12. Is that okay? And now, normally anyone who rent the house or office, they know that they normally increase the rent per year. And that's fair because it's a market adjustment. So I'm going to take 3% as the increment every year. Right? Again, normally in Chicago, it's 7 to 10% because I rented my property. So, people don't question that. That's normal. I'm doing 3%. Again, we can adjust later. So right now, same, just like we did here, I'm going to do the same thing. So I'll say plus this one times, right? Multiply by 1 plus this and F4. Why? Because I need to log that. I'm keeping it 3%. So now each year, the price is going to increase, and this is what will happen. Please understand, even though we say we want to sell on 5th year, it is possible customer may want to sell on 3rd year or 1 year. So you don't want to do one research for 5, one research for 3, one research for 1. You don't have to do. You want to give them detailed research so they make decision. Is it worth to sell on 5th year or is it worth to sell on 3rd year? Make sense? So renting income. Now we can consider about other income, but you got the idea. So right now I'm going to say incomes, total income. So I'll say total income. The reason I'm saying total income for now, because if I sell on 1st year, which is current year, I will charge, this is the continue income, 36,000 and then 100,000 is the property. So total, I can definitely ask 136,000, right? So I'm going to do sum. See, I'm recording the sessions. So after this recording, if you say I'm confused, I don't know anything, that's my fault because I did not teach well. But if you don't practice, then it's your fault. Okay. So you have to practice. Trust me. See, I'm doing without any resource or material. Why? Because I did hundreds of time practice. This is not like something I memorized, something I need to understand. Make sure you understand that. If you memorize, you would forget today or tomorrow. But if you understand lifetime, you will remain with you because this is something you will use often, right? So here I have my total income. And now I drag it. See, I did some of this. And if I drag it, then I have this. Any questions so far? Any question which is confused? My God, I don't understand this. Anything bothering you so far? Everything is good? Okay, now we'll consider the same thing as our source of expense, means our cost basically. So now we'll say expenses. And normally, again, you have to consider about creative expenses. Again, there's no wrong or right answer. It's all about analysis. That's why it's, remember 10,000, 50,000, 5 million. So what are the key expenses I will have if I, try to manage this house? Any suggestion?
Utilities.
Sorry, utility. So first we'll start with the property tax. I'm hoping everyone knows, those who are having house, property tax, utility bills, right? And second is maintenance, right? Anything else? If you have a house and if you are giving realtors, right? Some of you might have realtors, maybe your advertisement cost, advertisement marketing cost. Do you guys agree? Because they may charge. Sometimes house is empty, it does not generate this money. So you have to pay a realtor some cost. So you have to consider all possible costs which you think you may need to do. For time being, this is good enough. So let's say property tax in this state, let's say assume 20%. So these are adjustments because some of you are living in Illinois. Maybe you have 29%. Some of you are living in maybe Dallas, maybe you have 5%, maybe New York 7%. So that's why adjustment vary. That's why the word was adjustment. Utility bill, let's say utility bill is maybe normally somebody told me the rule ballpark is 3% of your house cost. So we'll say 3%. And maintenance, let's assume ballpark, maybe approximately if it's a house, maybe around 7% the maintenance cost. And advertising and marketing cost normally, our what do you call agent takes based on the rent. So 1 month rent. So we say 3,000. Make sense? These are adjustments. There is no wrong or right answer, but you can do appropriate, what do you call, detailed numbers as per your choices. Any questions so far?
I have a question.
Yeah, go ahead.
So we have a house for a total of 5 years, but we have column for 6 years in total. So aren't we supposed to have income for just 5 years?
Sorry, could you repeat again your question? Are you having questions about why you have this thing?
So yes. So aren't we supposed to have income just for 5 years? Like here, we can see income is calculated for 6 years. There's
Yes.
income for 0 year as well.
Yes. So 0 year means current year, right? And if you consider current year, then this is first year, which is next year. So if somebody say, what would be the income year after? It means they don't consider current year after, which is this, right? So normally you do this one. But if you want to do this one, not a problem, not a problem. In that case, you could put your assumptions. If you see that in your exercise, there's a word called assumptions. It means you say that we are selling house on fourth year, but 0 is a current year. The reason current year means good with future value perspective, these are not applicable because these are exactly the same. Future value and present value is same for current year. So if I say $100, if I say $100 value current and future for today's time is same, right? So when somebody says 5 years, normally they think about from current year onwards. Normally, that's the way it considered. So if you want to write this way food, that's fine. As I said before, they can sell at any time, right? They can sell any time. So here it looked like a 6 years, but current years normally doesn't come in consideration because present value and future value will be same. You will see in the example. You will see that.
Okay.
That is all. Good question. Any other questions? Okay. So
That marketing is 3000%.
sorry,
Yeah.
can you repeat?
Marketing cost is it 3000% or just the $3,000?
Sorry. I think there was a question by Corey about discounted cash flow. We are not get yet. We are going to come there. We are just thinking about expenses. So that will come. That will come. But the question is, do you want to consider, right now we have appreciation, so we cannot consider depreciation, right? Because normally depend on house, right? Some house appreciate, some house depreciate, depend on the age and all. But here we consider appreciation, means it seems like we're in demanding market, so we don't consider depreciation. But if you have purchased this as a, what do you call, building in the sense of office building, just like our Schaumburg office, then I would do depreciation. It's a wonderful thing. One, I would say, Einstein said, right, that like it's the ninth wonder. Depreciation is the ninth wonder for business, and you as a business analyst, you must know about depreciation. I can tell you, if you just know the one depreciation word, you will do a lot of amazing decisions in your life versus not to make decisions. I personally, let me just take 2 minutes so you can understand why I'm telling you. Just 2 minutes, because I teach this class and you will not know how much value I gain from this class than anyone else. Because when I teach, I need to read, I need to prepare, I need to research. So this exercise I actually did long time back when I bought the Schaumburg office, real office. And before office, we did this exercise. Should I purchase or not? And I'm going to put the number also, so you'll see. But our research came up that we should buy this office, which is Schaumburg, around 450 or 485,000. And we did negotiation and we bought this Schaumburg facility in 420,000. So we did quite a good negotiation. And I thought it would take me a long time to pay off this, what do you call, property, because normally you have to pay installment. But one thing I did not calculate in my mathematics is a depreciation cost. And I hope Praveen might have touched a little bit about depreciation, but just want to make sure depreciation is wonder, and IRS also give you that. So 420,000 is the property what we bought. But then I created a 5 years flat line depreciation. So $80,000 government gives me as an expense. So it's 80,000 times 30, which is 24,000. Government gives me back. I don't have to do anything. So 24,000 I was paying back to down payment or the installment every year. I paid off whole property in 4.5 years. No one knows about the depreciation factor. So what happened? They normally don't even put that in their expense. So if when I buy a simple table, computer, pencil, anything which I depreciate, I should. Technically speaking, I can pay only 10 to 12% tax. I don't have to pay, and that's why Mr. Trump doesn't pay tax. Because in business, everything which is asset, here in a house is not an asset. That's the problem. That's why rental property is much better than house, because here you make Uncle Sam happy. In a business, you make yourself happy. You see that now Trump, they don't pay tax. Why? Because it's a property. So their every property they depreciate like flat line. So like example, their income is 100, but if their property is $10 million worth, if they do 10-year flat, IRS has to pay money to Mr. Trump. Why? Because so much depreciation happen. Again, separately I'll explain more, but buying property is always a good thing. Let me repeat. Always a good thing. Good property will really valuable, but just a separate topic. But anyway, let's come back here. Property tax. So here we'll take property tax of the original value times 20. But this 20 I want to lock down. So I'm going to do F4. Any questions so far? Here, any questions? So far, so good. Now press enter. So this one will give, and then I'll drag this guy here. Always remember dollar. So this is my property tax each year. Now utility bill is also similar. We'll do so same concept, nothing wrong. This is my original times 3%, and I'll do lockdown F4, right? Enter, and then I'll do dollar, and then I drag it. You see how many repetition happen? So this way you never forget. I click on it, right? And I don't have to memorize. That's what I want to make sure you understand. If you memorize, then you will forget. If you understand, you will not forget, because you are doing simple Excel. That's why this is Excel driven. And we are doing power of Excel F4, right? And then press enter. And again. And then we have also. And advertising marketing, let's assume we don't know why just keep them 3,000. Let's do it this way. We don't know that every year we don't have to pay what you call agent cost. So we'll say, maybe occasionally we need that. So here, let's say we need that. I'll say plus 3,000. And maybe after one or, because when first year, maybe we already have rental. So maybe we are getting this. And then maybe second year, we might need that. So get 2 years, and maybe we need it one more time. So I say plus and this. Again, these are hypotheses. Hypothesis, I always tell people, it's better to be safe than sorry. Any questions so far? So far, so good. So let's do total. And this is very simple now. I'll say sum. And the sum is done, and I'm going to drag this. I can do that. Again, I like to do a little bit color coding, so it's kind of useful. Again, whichever color you like, you can do, depends on your need, but I like to do some kind of color. So now we have to think about cash flow. Diva, so far, so good, Diva?
Yes, sir.
Yeah, this is what you were expecting, right? You want to go through that. So making sure you are understanding this one.
Thank you, sir.
So, yeah. So cash flow perspective, you have income and you have expense. So we're going to do subtraction now, right? Very simple. So we'll now do subtraction. So this is my income minus expense. And now this is my true cash flow. Positive cash flow is good thing. Negative cash flow is bad thing, right? So we have, this is our cash flow. Now here, we need to consider about discounted cash flow rate. Right? So normally, again, it depends on you and your company, how much risk factor they want to take. Now, there is a concept, like example, if you ask me, if I want to buy $1 million property, I don't have that much money, but I'm going to look for a bank and say, hey, can you give me a loan? And normally based on current interest rate, bank may give me 7%, maybe 6%, right? So 6% I'll take a loan. And then I'm thinking about Bank gave me 6%, but what if I don't pay off the proper installment? I may need to borrow again to someone. How much they will charge? Well, they will charge 9%. So I'll take 9%, give it to bank and survive. So sometimes you have to consider about risk factor. So first, the cost of borrowing money, which is nowadays is 6%. Then second thing is, if I invest that money in this project versus I invest in some other project, will I get a better return? And if yes, what would be the return I'm looking for? So a lot of things you need to consider. So right now, if you ask me, very simple, if you're a business analyst, remember one thing, you need to be financial analyst also. So if I have $100 and if I want to put in this project, how much money I would expect? So normally people minimum expect 7% plus, but we are borrowing money. We are borrowing money from the from someone which is worth of 6%. So 7% is 1%. So there is no point to do business for 1% because you need your own time. Because you're going to work hard, you're going to do. So you say, no, let's double it, 12%. So industry perspective, based on my experience, this discounted cash flow rate is appropriately between 10 to 20, where 20 is the high side and 10 is low side. Ideally, if you ask me, I would put in between that. So maybe 12%, maybe 15%. But if you are too conservative means you are safe, too much safe, right? Then you will do 20%. And if you are risk taker, you can take 7% because you think, I know I'm going to make money. Lower you put, it's you're more confident. Higher you put, it means you're less confident. So I'm going to put it 15% right now. The reason I do the 15%, it means I'm thinking if this is something worth of 15%, then I'll do it. Otherwise, I'm not going to do it. So there is a margin of error. Means 7% you're borrowing money. And then you have 7% margin, which is a lot more margin, right? So if you lose 1 or 2%, still you will make 4%, which is kind of good. So that's a 5%. Now we have to consider about, in this exercise, we have to consider about how we convert this to future. This is all I need to consider in a present value. So what would we do in a present value? So present value has a formula, and formula is, the formula is you take the original value, which is this one. This is the present value, right? Present value divided by 1 plus discounted cash flow, right? Discounted cash flow power n. N means number of years. So PV is the present value, which we have now. This is my present value. Discounted cash flow I have it, and n is number of years. Wonderful. I'm going to do that. So here, present value. Cash flow is also considered as a future value, right? Because it's all in future. You can see this is the 1 year in future. This is 2 year in future. So this is the future value. So I'm doing present value. This is my percentage. This is my year. And this is my original value. That's the difference between, you know, right? The difference between this value minus this value. So we have perfect. So now so here I'll say plus sign. This is my original value. Divide by, in parentheses, 1 plus this one. And cap means power. And then you take this one. So make sure you understand. Important. So this is original value, which is this one. Then you're saying this is your discounted cash flow, which is this one. Then you're saying this is power. The only thing I want to hard code is this one. So I need to do F4. I need to do F4 from here so I can lock this down. Okay. So I'll go back here. I double click here and I press F4. Why? Because my discounted cash flow is not changing. I keep it 15% throughout the lifespan. Good so far? Please give me thumbs up if you're very clear here what I'm trying to explain. Thank you. Thank you. Thank you. 6 minutes gave me thumbs up. Awesome. Very good. Awesome. Thank you. So now I'm going to press enter. So as I press enter, I'm going to get present value. And you might notice this value Let me put it dollar value here. And you might notice is this value, as Gurpreet said, right? It's same. Did you notice that? So that's why current value, we normally don't consider when we consider as a future value because they are same. Current year is 0, year is same. Now, if I drag this guy, you will see different value. Now, if I do future total NPV, net present value, which is nothing but sum of this all. So equal sum of this. So if I do and this sum is the worth of this. So if I want to sell this house after 5 years, I should be a question concerns now.
I didn't see the formula for the NPV.
Sum. It is a sum. Sum of all.
Got it.
Sum of all. Now, please understand, this is a very important thing. I'm sure many of you might have calculated similar or different. Your number will be quite different. Nothing wrong in that. But how you interpret that, that's more important. Interpret here. If I sell this out after, then this is the one. You will not do sum of this, then in that case, my sum, my sum should not be entire. In that case, I'll do 15 or I'll do G. Make sense or not? So if I'm selling, as Gurpreet say, like I consider that, right? So if I want to sell here on the 4th year, as Gurpreet wanted, then that house will be worth of 438,000. So basically, what you are doing here, if I sell on 1st year, which is 106,000, but if I sell in 2nd year, so combine that, and that's the worth of 202,000. And if I combine these 3, then it's worth of 287. That's why house price increase year by year, and that's why you say, man, my house really increased. So this is the what you call real way to calculate.
So I have a question.
My house worth of 300,000. 300,000. But the mistake they made is they don't have any rental income, right? They don't have any other source of income. And the area of their appreciation is decreasing because they're not doing appropriate maintenance. So what happened that this number will decrease significantly. I'll show you. If this decrease, you will see the house value will decrease significantly. Let's check it out. So now, let's for time being, let's say I make it 0%. So,
I have a question here.
yeah, one second. I'll put it 0. Just I'll explain a bit. This is 0. So you can see house significantly decreased. House significantly decreased. Why? Because there was no source of income. The reason source of income, now you're only counting heavily on your appreciation part, but otherwise you're not really getting that. So anytime you do that, so here, if I want to do appreciation, I can do also I forgot to do appreciation, right? We didn't do appreciation, right? So let me do appreciation quickly. Put this before I do that. Let me do appreciation here. Oh, I did. Sorry, I did here. Appreciation is here. So what I'm trying to say is that house is not rented. It is going to give you less income. Yes, good question.
So my question is, like, as far as I understand from my last class, so that initial value 100,000, we were told that it's an expenditure, so it shouldn't it be a negative cash flow, like instead of positive cash flow? Like it's not it should not be considered as an income, no? Like
sorry, I didn't get the question.
So like the 0 year, we started with $100,000. And $36,000 was the rent income, and we said total income $136,000. So, but like that $100,000, isn't that our like expenditure? Like that money went out of our pocket to buy that property.
Okay, so
Shouldn't
if,
it be a negative?
yeah, good point. Good point. So you know, if you know that you have invested, if you have invested, right? You have invested something, so you can add a row here. Add that. If you know
So,
that you right, if you know that you have invested some money, then you can add in like investment cost.
I mean,
Investment.
what I did
Here,
is
here, sorry.
I took the by I
Yeah, go ahead. I'm
calculated
listening.
I calculated the
Repeat.
appreciation value. Well, can you hear me
No,
right?
yeah, I can hear you.
So
Yes, I
what
can.
I was saying that what I did, like I calculated the appreciation value after like 1 year, which is like $5,000. Then for the second year, it was like $10,250. For the third year, 15,762. I just took those as my inflows. Not I didn't calculate that I didn't took the whole value of the house as my inflow. That's what I'm saying. That did
Yeah, yeah. Let me explain again what I am doing, right? And then you have to find your mistakes or own space, right? Because I do not know your own thing, right?
yes,
What I'm trying to say,
yes.
this is the right way to do. Now I cannot say
Okay.
like what you have done, right? But I'm saying this is the right way to do. So your question was, should I consider my investment cost? Absolutely. So I added the investment called house purchase cost. That's only one time. Do you agree?
Yes.
Say yes or no, right? So I put that and I change the formula now. The formula considered only first year because you are not going to pay every year house purchase cost unless you take a mortgage loan. If you consider mortgage loan, then you put installment, right? In that case, your house also have some what do you call bank loan which you have to pay, which you have to deduct. But if you have paid from your pocket 95,000, just add that. That's perfect. Nothing wrong with that. You don't consider these like this because this is your house. This is your outgoing flow, right? Outgoing flow is expense, but the expense is not every year. But property, once you hold it, you appreciate every year, right? That's the
Yes.
beautiful part about asset, right? Expense is one time, but
Yes.
appreciation is lifetime. Good. Anything
Yes.
specific good with which is confusing? Anything which in this line which is you think, oh my God, this is something not clear to me. Please ask.
I think I understand it in terms of if I pay $100,000 for the house, I did give up $100,000, but I still have $100,000 asset that I can turn around and sell
Absolutely,
and get
absolutely,
$100,000.
absolutely. Because just throwing money out in the garbage, right? That money is translated as an asset. You guys agree or not? Right?
Yeah.
Because if you buy it and same day you sell, you still make money. You're not going to throw money 95,000 just like that, right? So we can't make that mistake, right? If you 95,000, if you do deduct and if you not use, it looks like an accounting error. Oh my God, that's too much, right? 95,000 is a lot of money. Anything you buy, like example, you buy laptop 5,000 and you sell it. It is possible you might be not able to sell it 5,000, but you will still get some money because that's your 5,000 immediately converted as an asset. So asset always have a value. Good. Any other questions?
I have a question
Yes.
about for the NPV and PV. Can we write the Excel formula instead of writing down the amount?
NPV, I did not write down amount. I did a formula. I did not
I
write
mean,
down this one.
I mean,
Sorry.
just is equal to PV. We have to fill out we have to fill the amounts, right? So can we do that for present value or future value?
Sorry, I'm not understanding question. What is the question?
With the simple amounts, we just write, is equal to PVs. We get the formula from the Excel. Can we do that? Here we fill out the amount from the formula, right? So instead of writing this, can we just write is equal to PV and fill out the formula?
That's what we did. I'm not sure what's the question here. That's what we did. This is the formula. You can see my screen, right? This is the formula for PV.
Are you asking if we can
I
do
did
like
not write down.
equals NPV?
Yes.
You can do that, but that will not give you if you do NPV just like only one, right? You will not get this much power. You will not get this much power. This is the true way. This is the true way to do it. Instantly, if you want instant like this NPV, that has limitations. All those things, like example, if I'm understanding, you are doing NPV formula like this, right? If you do that, you don't have that power.
Yes.
That's the problem.
Okay.
That will work. Like example, you put like money in a bank. If you put, but you have only one factor. You put money in a bank, right? So you can say, what is the rate? 10%, right? What is the value? 100. And what is the year? Like that. Like you specify like that. And say 3. Right? And then that's what you are calculating, right? That's what you are calculating. But that is only one factor. There is no. You are not using all those beautiful things here, right? So, my understanding, it's kind of ballpark, but this is the right way to do. This is what exercise I did, Avni. If I do this for property management, they will give me $10,000, maybe $20,000. Depend on property. This is the decision of 596,000. The guy could have sold this property at this much. What I did that
Got
more than. So they're gonna give me money because I provide financial consultancy, and that's a business decision, right? So I help business to make more money. Can anyone has any questions before we switch the topic? Clear? I'll give you this Excel, okay? So I'll upload this Excel, so making sure you have that access. So you are fine, okay? I hope you enjoy. This is my favorite topic when I studied in Northwestern. So this is a very popular subject, and I did quite a lot personally as well as professionally for many businesses. And many times, you will be surprised. You will be surprised. Like many people do hunch in the sense of it is. I think it's worth of 300,000, but worth of 200,000. But you see how much is the difference here? 300 versus, right? So the difference is your expertise. The difference is your value. And when I started doing that, then people start appreciating that. What do you bring to the table? This is not require any memorization. This require common sense. What is included? What is here? And that require analysis. Analysis, you need to talk every day. You have to check, find out the bills and find out is it 5%, is it 3%? What is the property tax? You have to call village and find out. That require analysis. That's why talking, researching, meeting, interview. When you all, and I'll be repeating again, when you do the homework and you feel like, I'm not sure how to do it, it means you are not doing analysis. I always tell Bill, you always have the situation where you will not know anything. Because that is the reason they're hiring you. When things are totally dark, they need analysis. That's why they hire you. But if you still say, I don't know, then why would they hire you? So rule number one, when you do not know, deep dive, talk to group, talk to research, and keep doing till you find. Because product valuation takes time. Any new things, it takes time. And goal of the exercise, more questions, more discussions, more meeting with your team member. Okay. Anyway, now changing. I have 4 or 5 small topics to cover. It will not take long time. So today what I want to do is I want to continue. Make sure you download from our Google Class. The file is in Google Class. In case if you are here, it is data analysis part 4. This is here. I'm assuming you all have that file downloaded. Okay. If you have downloaded, then we can get started. Open that file. In this file, there are a lot of tabs. I created data for today's exercise, so you will understand and you will enjoy. It's pretty simple. Again, Excel has a magic, so enjoy the magic. So what happened? Sorry, what is the question?
That's not what I have. It's in under classwork, right? Data analysis with Excel for lab file.
You see this file? Download this, please. When you download it, see what you see. Open it. What do you see?
It's like a what if forecast cluster.
Perfect. It means you're on perfect file. It's in perfect file. You just need to click on these arrows. The arrows are there, and this is the first one. This is the second. So you're seeing second.
Got you.
If you say fourth file, you're perfect file because we are using same file. Right?
I understand.
This is the only thing I added today. You may not see that, which I will upload. And you will see that.
I'm there. I got it.
So right now, this exercise is a little different than we have done. So first, what I did, I added some sample, so we can use the sample and we can learn about it. Okay? So if your manager gives you this data and say, you know what, we have order date. Using order date, get the month and get me month specific cells, month specific. So this is the month, right? So what is the month specific cells, right? Like example, if you are 3, then that is March, right? So it's a March specific, right? If you are 12, somewhere you are 12. So our managers ask like that. So what I did here, I added a column called month. You can follow along and you click on that and try to see that. So I click on month. I type a month here, and then you double click here. So you will see here month. And then I selected the date. So I selected the date. And that will give me the month of this date. And then I double click here, dot, and it creates a month. If you are able to do that, just highlight and delete this now. Highlight and delete, and we'll do ourselves again, just to make sure. Highlight and delete. See on the screen, highlight and delete. Now, you do equal month, equal month, equal month, equal month, equal month, parenthesis, and then click on the date and close the parenthesis and press enter. So you got a 1 for this month, right? So equal month, parenthesis date, right? Now you click on that and double click on it. So you get the entire month. If you're able to do it. Okay. Nice. Awesome. Now I want to do, let's say, month specific. Please understand. I want to calculate month specific total sales. So here, January is the first month, February is the second month, and March is the third month. So how do I calculate that? Okay. So first we need to get this one, which we got it. Anyone has any question with getting this number, month? Now, using this formula, I was able to get the month. And if you are able to get the month, we can go forward. Okay, ready? So now please understand, click here, and type here sum if parenthesis range. So our range is this range. Highlight this range of month. Highlight that. So sum if, highlight the range of month, then comma 1. So 1 is here. This is 1. So just click here because you get a 1. You just click here. So that gives you 1. So this is your 1. You just click here. So that's 1. So this is the month range. Then you click here 1. Then comma, we want to calculate total. So we're going to highlight total. This is the sum range. Total. Now close parenthesis. So let's repeat one more time. So we say sum if. This first range is the month range where we have 1, 2, 3, 4 months. So we highlighted a month. This one is the one. That's my January month. And this one is the total sales column. So total sales where we have dollar amount for total sales we highlight. Now you press enter and you get the January month. Give me thumbs up if you are able to see the same dollar amount. Highlight and press enter and you get 160201. Makes sense? I'll put it, highlight this thing again. I don't want to, what do you call, type. I want to highlight. So this is my month range. This is my, this one, and this is my total sales. Make sense, sir? Now you press enter. Now you click here and double click on that. And ta-da! Manager is happy. Double click on that dot, the small square. Remember, square. Click on that. When having sum if, with a little bit formula, I was able to calculate month by month, each month total sales. Any questions?
Yes.
Anything that doesn't.
Yes, sum if then month formula.
First we are selecting month range, then 1, and then we are selecting
Then
total.
1.
So it's very so if range, then this one is the one, and this is the total sales. Good. Are you getting or no?
Trying.
I'll put it in formula in the chat in case if you still need that. You can cut and paste also to see that one.
I got everything but the L25. How'd you get the L25 again?
I just click random.
With it.
I just click here. Let me do it. So you will see here. See, I'm gonna type again. Sum if parenthesis, right? Range. So first range is the month. Range. Then comma.
Using code.
And then this one my hello, Monal.
That's right.
So
I was just worried about weather.
Please, can you show one more time how you came about with the month, the column for the month?
Okay, beta. Having fun with your friends
Hello, Monal, we
rather
are
than
able to
me
hear
and
you.
your
Hello,
dad.
Monal, you need to put yourself mute.
No worries, but enjoy yourself. Okay? Yeah. Love you. Bye. Jai Shri Krishna.
L2. Mhm.
Is that done?
Well, yes. So once you do L25, come on, and you highlight this one.
I got that. I just didn't get the L25. Okay.
Some range, and press enter. And then you double click. Now the question is, how did I get month? Very simple.
Yeah.
Double click and type here in case if you need it, is like equals month, right? Month.
Yes.
And A2 is your date. You press enter. Once you press enter, you double click on this thing. So let me show you. You just type equals month parenthesis, right? And then you click on the date, right? Close the parenthesis. So month,
How'd you get the L25?
month, right? And then you press enter, and you double click. You got that? And here the formula is pretty straightforward here now. Double click on this. First thing is highlight the month, right? The second one is highlight this one. And third one is highlight total sales. Any questions so far? Andy, you got it or no? Good, good. Thank you for it. Yes, thank you. And then you double click on it and you get the answer. Now let's do a similar thing. Our manager said, can you get me quarterly sales? And this is pretty interesting. I think everyone has to pay attention because sometimes, when I explain it, if it is not clear, you should ask that moment. You will immediately learn. But if you ask after 10 minutes, it's kind of a little bit back and forth. So please pay attention. You will understand how to get quarter. So first of all, everyone should know we got month here. If you're not here, very clear on that, just simple equals month, right? We did a month, equal month, and then we put A2. A2 is nothing but order date. So using that, we got this, and then we click it, and we got the month. If you don't have month, you cannot get quarter. So first I have month. I think all of you have month, right? And now I want to get, please pay attention, okay? I want to get quarter from this month. So if you think about year start with 1 month and ends with 12. So how many quarters do we have in a year? How many quarters do we have?
Four.
So first month, January, February, March, April, May, June, July, August, September, October, November, and December. So if we can choose, please pay attention. If we can choose, hello, please pay attention. If we choose this value as a first and say if this value, listen carefully. If I choose this value, which is in our case H2, and I say if this value is 1 or 2, I'll still select 1, or 3, I'll select 1. So what we are saying that if this value H2, if this H2, if it is 1, 2, 3, I'm going to select 1, means quarter 1. Second, if this value is 4, 5, or 6, so after 3, if there is a 4th, 5, or 6, then I'll say 2, 2, 2, and 2. It means this is my quarter 2. If this value is 7, 8, and 9, then I'll say 3, comma 3, comma 3. If this value is like that, then I'll say 4, 4, and 4. So choose function allows beautiful. It takes the value from here, and if this value is 1, 2, 3, all will get 1. So that's why we repeated 3. For 1, 2, and 3, we're gonna get 1. But if this value is 4, 5, 6, which is this value, if this value is 4, 5, 6, we'll just give 2. So you can say 2, 4, 5, 6, 2. If this value is 7, 8, 9, we give 3, 3, 3. If this value is 10, 11, we give 4. So if you now double click here, you will see something interesting. Double click, you will see something what I was explaining. So what it takes the H2. It takes H2 and say if your value is 1, 2, or 3, the first one, 1, 2, 3 is the first quarter. So we'll go 1. The second will give you second, 3 value, then third. So this way I can convert month to quarter. And the function I'm using choose, they're using the month value. Based on the month value, it automatically take 1, 2, 2, 3, 3. Why 3? Because 3 months. Each quarter has 3 months. So we are using repeating 3. So it doesn't matter it's a 9, 10, 11, 12. Doesn't matter. If this is a 10, you get 4. 11, you get a 4. 12, you get a 4. Right? Questions so far?
I think you wrote number 2 4 times instead of 3.
Yes, that's my mistake. So in that case, I just need to change it. Good observation. Very good observations. Right? Like that. And then you double click it. Very good. Any other questions? Everyone understand why I'm doing? I'm converting this month to quarter. And there are 3 months. First 3 months, it 1 month. 4, 5, 6, 2, 2, 2. 7, 8, 9, 3, 3, 3. 10, 11, 12, 4. So now you have this thing. Now our manager asks, can you get me quarterly sales? Can you get me quarterly sales? So first you have this thing. Anytime you make a change, you just double click on that. So you have. So everyone has a quarter right now. Can I count everyone has a quarter? Right? And if you have a quarter, now you go to this table and say you want to calculate the cells. So double click on the cells and you will see that I have already the similar formula as you did for month. Sum if, and this time I'm taking this is the quarter as a first range. The second thing I'm using this one as a criteria, and then this one as a total cells. And I'm getting. So see the formula. I'm focusing on quarter. Then I'm selecting quarter as a 1 as a criteria. And then I'm doing total cells. Makes sense. So let's remove this part and let's do our cells now. So I'm going to delete this part, highlight and delete. I'm highlighting and deleting. Highlight and delete. Highlight and delete. Now, let's see. Now, if I say equal, sum if, if I say equal, sum if, parenthesis, sum if, parenthesis, then select quarter range. Don't select the heading, just rows like that. So please understand, sum if, so I selected quarter, comma, the quarter number, comma, total sales, which is in our case this one. So once I select that, oops, total sales, right? So now my formula will look like this. And then close parenthesis. So see that I'm selecting this range, which is my quarterly range. Then I'm selecting this one, which is my quarter. Then I'm selecting this one, which is my total sales. Now if I press enter, and then I double if I double click on this, now I get the answer. Give me thumbs up if you are able to do it or ask question. Good, good. Yes. Very good. Good, good. So as you can see how powerful the Excel formulas are, and you can easily do analysis. Right? At this moment, any question or concern? That was our first step, right? There are some interesting tabs to cover. So right now, my topic may not take more than 1 hour. So do you guys want to take a small quick break, or you want to continue? First understand what is this forecast. Wow. So given that we have some historical data, for example, in 2000, when I started working, let's say I made a 50,000. In 2005, I made it 62,000. 2009, I made 72,000. 2020, I made this. Now somebody asked question, how much I was making in 2021? A question, and we have to forecast. So there are three things matter here. First, you have two factors. One factor is the year, and second factor is the salary. Now, this factor, the first factor is the driver factor. Driver factor means knowing this, predicting the salary. So these are driver factors. So sometimes we call X and sometimes we call Y. Y means something we want to find out, we want to predict, we want to find out, we want to predict. So that's two factors. First thing we need to know who's the driver and which one is the dip. So your annual salary I want to find out. That's the first one. The second thing we need to know is this historical data. The more data you have is better. So you select historical data. So this is your range of historical data, which is called known range. Known means you already know this thing. So known range, you already know. So this one is a year, which is normally X, and this is your Y, because this is something you know about it. So this is a known Y range. The reason they call Y, because you are going to predict this. Now this is something you want to find out. So using this, you want to find out. So this is something you have questioned. For these value, what would be my forecast? So first of all, so if you double click on this number, you will see the formula called forecast. You will see flow. Now you can see here C8, which is this one. C8, which is this one. B3, B7, which is nothing but Y range, which is this one. And C3, that's X range, which is nothing but this value. So first of all, so this is something you do not know. So you want to know for this value, what would be the salary. So you say C8, which is something you are given. Using this, right? Using this and using this known value, can I forecast it? Okay? That's what we are trying to do. So first, before we go in detail, what we're going to do it, we're going to delete this. We're going to delete this forecast formula. So let's delete it, highlight and delete it. So it will be like this, highlight and delete it. So first of it, highlight and delete this forecast. Now you write equals forecast, equal forecast. In parentheses, you can read now carefully. It's the X. So this is your X. Known Y, which is your this one known Y. Y is always dependent. Right? Y is dependent. Known X, and this is your known X. Make sense? Once we put it, you will get the forecast for this value. So check it out. So right now, I click on, after I type forecast, I'll say equal forecast. Right? Parenthesis start, click on the year. Then comma, Y range, known Y range, so highlight Y range, comma, known X range, highlight that and close parenthesis. You can see literally how it works. So this is your original value, which you want to find out. This is your known Y range, and this is your X. You may question, what is X? X is the driver. Means you always know this. You always know this and you want to predict this one. So if you know it, it's a driver. And if you want to predict, that's called Y, which is dependent. Now you press enter and see what you get. And you press enter, you get this. Are you guys getting this? Good, good. So you can see here, I get this answer, 90,000 something. Now, if I want to know my salary of 2007, just write 2007 and press enter and say, ta-da! That. Pretty cool. I like it. The reason I like it, because you can say 2007 means I'm more than 2005, but less than 2009. So you can see my salary is in between. That's pretty cool, right? You can predict anything knowing a little bit history. So example 2000, I want to know 2024, that's it. Then it will say I will make a little bit more money than 2023, which makes sense, perfect sense, right? So this value is changing. This is the driver, and this is a dependent, right? This is your known Y range. This is your known Y range, and this is your known X range. Question, concerns, doubt. Pretty cool. Awesome. See, if you are learning this thing, right, you can make use of it based on your industry. So like example, some of you are salesmen, right? You can predict how much sales will be. Some of you may be having customers, like a bank, right? Customers, you can predict how many customers are there. Some of you are doing investment, you can predict what will be the investment. So kind of nice exercise. I like it. It's using AIML formula. Forecasting is nothing but statistical formula. Using historical data, we are able to predict the future. Now let's do the forecast 2. We call forecast 2. Now in forecast 2, tell us, I want to know how you calculate the 2025 population. See if you can quickly give me the answer. You know what to do. Equals forecast. Then parenthesis X. X is your zero. Then Y range, right? Y range. So Y range is this one. Then X range. X range is this one.
643,804.
See if you guys can. Nice, nice. If you are able to do that, you know it now, how it works. Awesome. But if you're still saying, I'm confused, then you see on the screen and try, right? There's nothing to confuse. You have to see it, you have to try. There's nothing special. X is given 2025. You have historical Y, you have historical X, plug it in and run the formula. And you're pretty positive you will get the answer. The only error you will have if you are not properly doing the formula. Okay. So let me show you those who are needed how. So first thing first, equals forecast. Parenthesis. Click on X. You highlight this, comma. You highlight this. That's it. There's nothing special here. So please make use of your Excel knowledge. Highlight this. This is your Y range, right? And that's your this one. And this is your X range, right? That's this one. And present it. Right? And good news about it, once you formula, you can also predict like in between. Like example, I want to predict 2009. I can do 2009 and I can predict it. Notice that 2009 will come somewhere in between, closer to 2010, right? Now, it is possible it may not come because this data may have error. More error did I have than it come here. So sometimes this prediction will not come accurate because the data may have some fluctuation. Again, we cannot control the data fluctuation, but we know how to forecast based on existing data. If data is correct, forecast will be most likely be correct.
Tom, I got
Good.
a thought. Would it be prudent when you do this to add the chart and do like the trend line to get the R square number?
That is the right way to do. R square is the right way to do. But again, if you do R square, that's also a good one. But whichever ways, this is internally using R square. I can tell you.
Ah.
R square. Now, if you use R square, like example here, let me show you. It will be a poor value. It will be poor value. Why? Because you can see the values. It's not good. Means this one. I say predict 2009. It came up 2093. Though in 2010 it was 2035. So litmus test says that this model is not predicting correct. It means R square value will be very, very less. It will not be 0.9. Makes sense or not? But in a previous model, here it is proven to be. If I take this one, right? If I take this one and if I do R square, I give you guarantee R square value will be close to 9, right? So again, you can use all the things, no doubt about it. But what forecast, simple formula is use that thing, or you can do graph, but ultimately you will get it the R square, and then you will find your M and C. In this model, the forecast number 2, C is pretty high because your error is high. Good. Good question. Any other questions? Everyone understand? This is the formula. We are using the formula to predict. Now, let's do another exercise. Now, please pay attention. You really like it when you use this thing, okay? So it's pretty interesting thing. So please pay attention. It's 5-minute exercise, but it's very powerful. So here you have 3 investment model. You're investing in a bank on 10,000. You're getting return 2%. So you multiply this, you get $200 yearly. Mutual fund, you invest $20,000. You get 7% return. You get yearly this much. Stock, you invest 30,000. You get 11% return, and you get this much return a year. And this is your total. Right? So first of all, if I click here, double click here, you will know what I'm trying to do. It's like this 2 and getting the answer. If we multiply this 2, getting the answer. Multiply this 2, getting the answer. And if I double click here, it's a sum of these 3. So any questions so with the available? Anything doesn't make sense so far. Right? Basic data, I try to make it simple. Okay. Now, sometimes you may have a question in your mind that I have this much money, right? But what if I want to earn this much money? I want to earn some amount, like example, 8,000 yearly. Then what would be the return I want for stock market? Or sometimes you may be interested in how much money I need to invest so I can get that whatever I want. This type of analysis. So what if analysis means you know basic up to this you know. But then you have a question, why 5,000? If I want to earn 7,000, what if I want to earn 7,000? How much return I need for stock market? Or how much I need to invest in a stock market to get 7,000? Those questions is what if, which is very powerful. So in order for us to do what if, we need to have data tab. So go to data tab. And do you see here what if? Give me thumbs up if you are able to see what if. Right? You are able to see that. Now, this what if has 3 things. So please pay attention. I'm going to click on, I can click wherever I want, right? So like example, I want to click anywhere. So like I click here, please click any open box. Click on any open box. So let's say I click open box. Then I click on what if analysis. Click on what if analysis. Now, if I click on what if analysis, you have over there goal seek. You have goal seek. So click on goal seek. Click on goal seek. I'm in a what if analysis. I'm in a goal seek. Everyone should have a goal seek. So when I click on goal seek, I have three options. I have three options. Please pay attention. I have three options. The first option says set cell. So pick any cell where you want to write the answer. Where you want to write the answer. The second thing, to value. So here, set cell means, sorry, my mistake. Set cell supposed to be the formula which you want to change. So this is the total formula. So set cell is this. And to value is the desired value, what you want. Desired value, which you want. And this one is the one which you want to change. So example, I want to change the interest rate. What interest rate I need, or return I need, or what amount I need, or anything you want to know about. You want to know, that is the change set. You want to know about, change about it. So that's a change set. So let's repeat again. Let me cancel. First of all, click here. Click here. Now, when you are clicking here, what happened? It does get the sum of this. So you are getting sum of this. So you have everything calculated, and then you're calculating sum of this is here. So you click your cursor here. Click your cursor here. And now click on what if analysis, goal seeking. And you can say that this is my current cell. This is my current cell, but I want to make $7,000. So let's write 7,000. Right, 7,000. And I want to know how much in return I need in a stock market to get 7,000. So this number will change. This number will change. So let me click it. So here, type 7,000. So when you start type 7,000, then you click here and pick whichever ones you want to know or change. So you are saying that this is the current value, the future value, or the our goal seek value is 7,000. So from here, I want to go to 7,000. Change, you're asking Excel to change this thing, so I get 7,000. Now click OK, and you will see now you will have 7,000 here. This number will change. Give me thumbs up if you're able to do so. It means you need 18% in order to get the 7,000, right? Let's do one more time. You click here, go to what if analysis, goal seek. So again, same thing. Let's do one more time. You click here, go to what if analysis, goal seek. Make sure your item is selected here. Now let's say I want to make 9,000. I want to make 9,000. So I put 9,000, and I want to know how much investment I need to do for stock. So this will be my change value. So this change value will be this one. So let's do that. So here 9,000. And here I'm going to click on this one. So you can see now, this is my current value. This is my desired value. And this is my changing value. I want to know what my change I can bring to the table. So I get this value. Pretty cool. Yes, sir. Now, if I do OK, you will see now it will change this value to get me 9,000. Give me thumbs up if you're able to do so. Pretty good. Powerful, right? Yes or no? So this kind of things you need to think. This is called goal seek. So sometimes you need to have a question in your life or question in your equations. Hey, I'm getting this, but what if I want to get this? What should I change? And how much I should change? This is what if analysis. Right? So now I'm hoping you are doing that. If you are able to do that, now click on what if 2. Same formula. I want you to help me. Click your cursor here. Click your cursor here, go to what if analysis, do goal seeking, and tell me what would be the return you need so you can make $8,000. So let me repeat again. Let me repeat again. Let me repeat again.
56,471.
Wow, that was fast, right? So you select this thing, right? And you are saying that currently I'm making 5,000. I want to make 8,000. I want to make 8,000. So current one will be this one. Desired value will be 8,000. And you want to change the mutual fund investment. So you are asking computer what mutual fund investment I need to make. So I make $8,000 instead of 5,000, and it will get you the number. See if you guys all can get me the number quickly.
Okay, I changed the stock instead of mutual fund.
That's fine, doesn't matter. But you can run again. Make the stock 30,000, reset, write it down 30,000. Doesn't matter. The process is pretty straightforward. So like now I'm going to do it. Click here, what if analysis, goal seeker. The original value is here. Let's say I want to make $8,000. Right, that's what I want. Target 8,000. And I say I want to change stock or I want to change mutual fund. In my case, I want to change mutual fund. So I'm saying, you know what? Knowing that I make 5,000 right now, my desire is to make 8,000. How much investment I need to do in mutual fund or stock? Doesn't matter. Pick it and then say, okay, you will get the answer. Pretty cool. And this is the life cost. This is the way most of people, investment people or insurance people calculate about the retirement plan or this plan or that plan. Again, very popular in credit, banking, insurance industry, very popular what if analysis. Good. Any question, concerns now? Good. Now, let's do one more interesting exercise. Go to data table 1. Let's do it. Now, this is it's pretty easy, but you need to pay attention so you make use of it. When I explain this concept, it's the way I designed this lab, so it's easy for you to understand. But ultimately, it's you who make use of it. Doing lab is one thing, and make use of this learning is another thing. So let's understand the concept. So concept is very simple. Please pay attention. Concept is simple. Monthly installment, I'm paying $2,500. Monthly installment. Yearly, 10 years I'm going to pay. Rate of return is 5%. It's discounted cash flow, right? So what would be the future? Just like think about people who do investment and annuity or some kind of life insurance policy or some banking, stocks, mutual fund like that. So this is what we are targeting. We are saying you need to pay monthly $2,500 and you are going to pay 10 years straight. And return you will get 5%. So after 10 years, what would be the number you're going to get? So if you double click here, we double get a formula. That's called future value. Now D7, which is D7 in your case, D here, and this is 7. Rate of return is yearly, so we are dividing by 12, which is the monthly. So D7 divided by 12, which is monthly now. So this is now monthly cost. D6, 12. D6, 12. This is yearly you're paying. Sorry, yeah, monthly I'm paying. So how much yearly I'm multiplying by 12. And here I have 10 years. So this is yearly I'm calculating. This is monthly I'm calculating. And this is the number of years I have. So please see on the screen. Double click on your formula so you can. You're saying that if I pay $2,500 monthly for 10 years and 500, this formula will give me the correct answer. The reason I divided by 12 because the percentage was yearly, so we divided monthly. Any questions so far? Good. Now, what our management asking us to do, management say that in this table, you are hard coding 5 years and you are also hard coding 10 years. Can you create a table where interest rate change and year also change? Year also change. So this is year, be dollar, should be year. So this is not a dollar, this is the year. So my manager asking me to come up with a table. My manager is asking me to come up with a table where this rate, rather than just hard coding 5, add different interest rate and add year. So if person wants to do only for 6 years or 4 years, we have answer for that. We have answer for that also. Okay. So how do we do that? So please pay attention. Again, this is the formula. Formula has to be right. So formula, monthly we are paying, 10 years we are paying 5%, and this is the future value that we check. Now, whatever you have here, that I added here. So how I did that? I'll show you. I click here, plus, and I just click on that. So I got that. So that is my corner point. That's my corner point. Now I have 2 corners, 1 and 2. Here, I kind of use my interest rate. Whatever I can start with 3.0, 3.5, whatever. I want to know more about this interest rate. What would be my future value? And this is my year. I started 2 years in an interval, but you can have 3 years interval, 5 years interval, doesn't matter, right? And this one is your choice. Like I said, 0.5 increment, 0.5 increment up to this. And here started 2 years, 4 years, 6 years type of intervals. It means if user wants to pay for 12 years, user wants to pay for 6 years, what will be the number? So this is the number. So we want to calculate the data table. So knowing one formula, we want to give different choices for interest, different choices for year, and when you want to calculate the detail instantly. So far, so good. Any questions so far? Okay. So right now, you highlight this and delete this table. Highlight and delete. Highlight and delete this table. Good. Highlight and delete. Now highlight this table again one more time like this and go to data tab, what if, and data table. There is a data table. So data is the menu. Go to what if and data table. Please understand, this one is coming from this formula. This is your choice. You can change any time. This one you can change any time. But we want to have calculations for each selection. So if user give me options, I don't have to calculate it, but automatically available for me to present. So now what if analysis? Data table. Now it says row input cell. Please understand, row input cell. So what is this? Is a row. So row input cell in our case is year. So let's click on this one. Is click on year. So click on year and column input cell. So this is the column. In that column input cell, you can put it your column, which is in your case is rate of return because it's in column. So now row, I click in row input cell, click here. So that's a 10, it's selected. And I click here and column input cell, I click on 5%. Please understand, rate of return is in column here. And here is in row. So I selected accordingly whatever I wanted. And now just do OK and give me ta-da! We got a 0. Why we got a 0? So something we have not selected correctly. So let me, my selection might have not let me put it my, 1 second. So why we got 0? So it is selecting the set. Okay. So let me highlight this table, entire table. Sorry for that. Give me a second because I think we might have selection problem. So data table. Now row, same row, right? And then select the rate of return. And now, yes, we got it. Right? So I think the selection was wrong. Let me repeat again one more time. When I did go to data table, right? If I delete this thing, right? This value is this one. How did I get? I just did a plus corner table like that, plus this and enter. So that value comes. This is my choice. This is my choice. Now you highlight the entire table like this. Now do what if analysis. Go to data table. This is the row, and row 1 is year. So select year. And this is the column. Select this and just say ta-da. Any questions? Anyone who did not do it or having questions? You can change this number. It will automatically calculate its thing. It won't have any problem. Very powerful for insurance, banking, especially we have a couple of team members who are working in a bank. So they have a question, right? FD. If I put FD for 2 years, 4 years, 5 years, 6 years, what will be the number when I withdraw money? All those things you can instantly calculate. Those people who are, doing insurance, like life insurance policy, all you can calculate instantly. Pretty cool.
I have a question. All right.
Sure.
How is the 388,000 being considered in the table?
This is the formula. So this formula helps you to take this number and this number, just like you calculated here. So that's why this is important. That's why first thing it is a corner table. This one is using this value and this value and calculating based on this one. Because this remains fixed. That's why when you select row and column, it use each one, it use to calculate that. So this one through, it knows the formula. This one through, you knows the formula. Good. Any other questions? So why don't you click on data table 2 and see if you guys can quickly calculate it. Here I say monthly installment is 25,500. I have taken loan for 15 years. Interest rate is 6%, and I have to pay total this much, right? I want you to calculate that thing. See if you fast calculate it. Come on, calculate it. You know how to calculate data table. I added different interest rate here, right? You can do whatever you want. These are year, right? These are years. So I'm going to remove that and put it here. This is year. This one is the same value as this one. Future value we calculated quickly, easily. That this one is yearly, so I calculated monthly, right? This one is monthly. So using this, I put it this value here, and now this is your column, this is your row, and then calculate it.
Somehow, I have a question. Somehow my values are same as the previous table, even though the future value is different.
Let's see, it is possible. It is possible. Not same everything, because the percentage is different. I believe I added different percentage. Okay, so we can change that. So like example, why we can change that. We'll see that. Okay. So first of all, this one is changing, right? Everyone is good. Now let's do that. So here, data, what if analysis, data table. First, let me highlight it. Sorry for that. What if analysis, data table, row input cell, row input cell. So here, this is my loan year 15, and column input cell, which is in my case 6%, and I get this one. Are you guys getting the similar or different?
It's same.
Similar. It's similar too.
Yeah. So it is possible because it is possible. So it means 4 to they are same because the dollar amount is same, right? There is nothing specific because let's change this number, then it will be different. Let's change this number. Maybe do 1500, then it will be quite different. Yes or no? Because the numbers is same, so these two numbers are same, then value will be same, right? You are right. Because you are saying percentage same, you say term same, and you also say the installment same. So yeah, in both cases it will be same. But if you change installment number, then everything will change. Did you see the difference now after changing this one?
Yes.
Everyone is good? Awesome. You guys are doing fantastic, okay? Any questions so far for data table? Now, do one interesting thing here. Please pay attention. Highlight, click here on your T column. Make it T column, click here. Go to insert menu. Go to insert menu. Go to insert menu. So you click here, insert menu, you have 3 options, line, column. So you can pick whichever you want. So let's example, I want to put column or line, whichever you want. So I'm going to click column first. So click on column and you select data range. So I'm going to highlight this row only. Highlight the row and just say okay. It will give you a nice column. Let me repeat one more time. So it kind of give you distributions. So kind of nice. So let me remove that. So first again, I'll do Control Z. Now again equals, not equal by mistake. Insert. Then I'm selecting column. You get it, and if you drag it, you get this one. So you can see how the distribution, as you go further in a year, you get a better money. As you are less, you get less money. So first year, second year, give me less money, but as you increase the year, you get the more money. If you change this different options available, color, style, you can do. So again, high point, low point, you can specify also low point. Again, there are a lot of things you can do that. Choice is yours. Okay, you can also do like line, so that will be line. This one, right? Win loss, you can do that, or you can do whatever you want. So again, choice is yours. Play around. Sometimes data gives you better benefits when you have visualization next to you. So here it's kind of visualization. Nowadays it's very popular. The bank also give investment company gives you visual. So it data visuals instantly you can provide. Any questions so far?
What did you select in the data range? I got the location range, but data range? The entire row? Okay.
Yes. After you row, once you get this answer, you just drag it.
Yes, I got that. Thank you.
So when you select this, it gives you one row, and then you just drag it. Okay. Now next one, last one. So you all will be seeing the graph like this, right? You all see something like that. So I'm going to delete this graph, right? So now my goal is to get that graph. So somebody give you this, your regions there are 4 regions, and there are your 3 years. And somebody say, can you put in a visual form and make it more impressive? So that's what we are trying to do. Cluster graph, because sometimes this doesn't help data if it is numeric form, visual form it does help. So first thing what you need to do, highlight everything. Make sure you follow, because I really like when you follow. The reason I'm saying that it's always learning should happen smoothly, not abruptly. Because after 10 minutes, we say, what did you do? I want to make sure you do it well. always it's so much fun you get in the first attempt, because I always believe it's very, you can learn more. So first you highlight it. Good. Then go to insert menu, and look for this chart. This is one of the charts. So I'm going to do first highlight it entire chart, and I'm going to select the first chart. Select first chart. So when you click on first chart, you will see some. Give me thumbs up if you are with me so far. Right? I'm going to move so you guys can see better. So first of all, now there are two, three problems in the chart. One problem is it shows your, I don't want this one also. So I need to remove that. So let's remove it. So for that, you select here and you say select data. If you have my kind of menu, you will have option called select data. When you click on that, if you don't have that, you can right click and you will see somewhere select data. Select data, you will see somewhere select data. So again, please understand, if you click on the graph, you will have option called select data. So if you click on select data, you will see menu like this. Or you can right click and select data. Now you uncheck a couple of things. You uncheck this one and you uncheck this one. So now you got uncheck this, you uncheck that, and do OK. Your graph will be much better. Give me thumbs up if you're able to do that. So select data. I uncheck this too. Very simple. Now, sometimes your company might say, you know what, show me year here, right? 2010, 2015. So just click on switch here and you can flip the graph. So click here and flip the graph. And now you can flip the graph. So it's kind of nice way to do that. Makes sense on it. You can flip the graph. Graph will show region, graph will show this. So it's much more comparable, right? You can do that. Now you do OK. Now, if you want particular, thing here in your decoration perspective, there are a lot of decorations available. If you click on your menu, a lot of decorations available, whichever you like example, line, graph, charts, you can feel free and do that. So example, let's say if I want to select this one, you get a little bit much better benefits, a little bit more formatting. Again, play around, give a professional look. Pretty cool. This is where you make a difference, because in a few minutes you are presenting data much more professionally. Again, play around. It's not like this is the only way you do. Play around whichever you like, and nice look and feel. Again, choice is yours. I like to give like this. This kind of data you will be presenting a lot because you're a business analyst. As a business analyst, you're a data analyst or your financial analyst, you will have opportunity to present. Ask yourself, just providing table versus you providing this, it's quite a difference. So it's important you know about this, how to show the cluster chart. Good. So this is where I want all of you to work together now, the last and final moment of the day. But before I move